Understanding credit scores in Canada. That's the topic today. Let's get right to it. I'm Rob Tatro from robtatro.com, portfolio manager here at Canaccord Genuity Wealth Management and the Tatro Wealth Advisory Group. The key with respect to credit scores is you got to understand, first of all, what you're trying to accomplish, where you want to be, and what end purposes your credit scores do give for you. All right. Before I get into it, please take a sec to like, subscribe, please share, tell your friends. We'd love to hear your thoughts about this or anything else. And if you want to book a no obligation consultation, please go to www.speaktorob.com. We'd love to book something with you to chat about this, your investments, or anything else that's on your mind. All right, credit scores. Credit scores in Canada. First of all, how do they work? All right, there is a range in Canada. The range is typically 300 to 900. Okay. So if you're at the bottom end of that, that means you have bad credit. Okay. If you're at the top end of that, that means you have good credit. Let's break it down. 300 to, I'll say 560 or so, you're not going to get approved for pretty much any kind of loan. Even if you do have a lender, it's going to be kind of loan sharking. Your interest rates are likely to be as high as 30, 40, 50%. 560 to 660, you're probably only eligible for secured products. So if you do get approved, expect an interest rate as high as 25, 30%, and it's going to have to be secured. And sometimes you're going to put cash up front. That's 560 to 660. A little bit higher here, 660 to 725. You're probably going to be approved for credit, and you may even be offered a decent interest rate, probably below 20%. And if you invest the time and the effort into building your credit score, you can save yourself a lot of money in the future. I'd call that a fair rating. Above 725, let's say 725 to 760, now you're in the good range, all right? Now you're getting approved for credit. You're going to get a low interest rate. You can even unlock potentially a better interest rate. The banks like you've been good, you've probably not missed payments, etc. Above 760 to 900. So this would be, you're among the best in Canada. You got a really good credit score. You're getting the lowest interest rates. You're getting approved on credit. You're probably getting offers in the mail for credit cards all the time. They love you. They want to get you more access to credit. The average score in Canada, according to TransUnion, one of the two credit reviewers in Canada, the other one being Equifax, is the average credit score is 650. 650 is the average score in Canada, but 20% of Canadians are below 600. Whole bunch of different ways where you can check your credit score online. There's a bunch of different websites offering either free or trial memberships to try out or to find out your credit score. You want to aim for a score, I'd say above 700. Above 700, now you're starting to get pretty much the lending you want. You can get your pick of the litter, really, if you will. And the key really with respect to lending is to make your payments, right? So some factors that'll affect your credit score include how long you've had the credit, how long each credit has been in your report. If you carry a balance on your credit cards, what percentage of the balance you carry on your credit cards. If you miss payments, if you regularly miss payments, the amount of your outstanding debts. If you're close to your credit limit and you're consistently close to your credit limit, that's reported. The number of credit applications. This is a big one. You go to a Winnipeg Jets game or a Toronto Maple Leafs game and you see someone there, hey, apply for a credit card, get a free Maple Leaf blanket. You're like, I want a Maple Leaf blanket, and you just apply for credit cards all over the place. Fine, you get the blankets, but I mean, that's a bit of a notch, a negative point on your credit score every time. The type of credit you're using, whether it's credit card or lending or secured or unsecured. If your debts have been sent to a collection agency, that's not good. Records of insolvency or bankruptcy, obviously not a good thing, okay? So who sees and who uses your credit report? Obviously, any lending institution, banks, credit unions, financial institution, credit card companies, car leasing companies, retailers, mobile phone companies, insurance companies, the government, your employers, your landlords, they can all get and use your credit report. Now, typically they'll need a signature from you in order to do that. So I would suggest you, whenever you think your credit score may be run, I would ask the individual, are you running a credit score? Are you running a full credit score? Are you running a ghost credit score? Because you want to understand that. So the decisions that they're likely going to want to use your credit score for is whether to lend you money, how they're going to collect the debt, whether they consider you for rental housing, consider you for a job. They do sometimes run a credit check when you apply for jobs, whether they want to provide you with insurance, maybe even offer you a promotion, or definitely offer you a credit increase on your line of credit or your credit card. So your credit history matters because financial institutions are consistently going to look at your credit report, your credit score, to decide if you're going to lend you money. That first credit card you get, that first $500 limit credit card you get, I remember I was, 18, 19, $500. It is critical that you pay that one down. If you can't pay it down, here's some simple advice my dad told me, just cut it. It's really that simple. If you can't pay your credit card down, if you don't have the income to pay it down, cut the card. All right. Continue to make your payments, but stop using it. Mind you, nowadays, cutting the card is not necessarily going to lead to you stopping to use it because you can use it online. But regardless, that's important. So you start small. If you make your payments every month, you're basically getting free use of the money for the month, right? You use a credit card, you make your payments, you get time after the month to pay. As long as you're paying every single month, in no time, you'll be offered $1,000 limit. Then it'll be $2,000. Then it'll be $5,000. Then it'll be $10,000, right? Then you can get a loan. Then you can get a mortgage. Then you could buy a house. You get pre-approved. You can get a car loan. So this is how you do it, right? You start slow and you build it and you don't miss on your payments. If you are missing a payment, call the bank. Let them know. Over time, this is going to save you a ton of money because the interest rate that you're paying now, sure, it might be high in your credit card, but if you're paying your payments every month, it's not going to matter long-term, right? But you know what will matter? The interest rate you get on your first car loan. That's going to matter. Is it going to be 12% or is it going to be 5%? That's going to matter. Those are big numbers. And you know what else is going to matter? Even more, the interest rate you get on your first mortgage. That's a big one, right? If you can get it at 2.25% instead of 3.25%, the posted rate, right? Now we're talking big savings over the lifetime of a 25-year mortgage. You're probably not thinking about it today, but it's something that's going to cost you money down the line. Credit scores, remember, try to keep it under control. You want to be above 700 to try to start get lending. If you're not getting the lending you want, ask them why. Ask them, is it the credit score? Try to figure it out. And if you're worried about your number, feel free to go online and try to get a free number, but be careful. They'll oftentimes ask you to sign up for some sort of membership or a payment plan. All right, guys, thanks so much for tuning in. Don't forget to subscribe and like if you want to chat about your investments. I'm Rob Tatro, so go to www.speaktorob.com. We'd love to book a no obligation consultation. Rob Tatro, portfolio manager from Canaccord Genuity Wealth Management and the Tatro Wealth Advisory Group. Thank you so much for tuning in, guys. I will see you in the next video.